Hi and welcome to the Financial Fox. First of all, I hope that you're all safe and taking care of each other. We are seeing something crazy going on in the stock market, and I can understand that you're all concerned, that you're all worried, you don't know what to do, because this is something that I feel, this is what my friends are feeling, this is what everybody is feeling. And so I'm going to start a series of videos when I'm talking to experts that have been in the market for a long time, and they can share their views, their opinion, and that in a way will help us to think about it a little bit more rationally and not be taken by fear. Because when we are panicking, big word at the moment, we are just going to make the wrong decision. We are facing something that we've never known in our lifetime. And then we see crazy panic buying at the supermarket and stores where you can't find any toilet paper, can't find any kitchen rolls. And at the other side of the coin, we see an unprecedented panic selling by investors across any financial markets. It's kind of like selling everything. This is basically the mindset. Everybody wants cash. So cash is king, we knew that, but panic is definitely not a plan. So today, our special guest is Nick Harris, corporate advisor at R&B Capital, and we will be discussing with him how investors should behave and how they should deal with this unprecedented situation and how they should rethink about their investment strategies. Because this is the main things. Don't panic and take a step back. Don't do anything until you have assessed the situation and then come up with a strategy that is gonna get to achieve the goal that you want, but is a more well-thought strategy. Hi, Nick. How are you?
I'm very well, thank you, Steffi.
Okay, that's good news. I'm well as well. So far, so good. Are you self-isolating?
Well, our office has closed as of Thursday, so everyone is working from home as from that point.
Okay, wonderful. So let's go straight to the point, which is about this panic selling. So all this week has been a dash to cash. Investor has been selling everything. So there was a crash in the equity market, but also in the government bonds as well, which usually is used as an edge against some other more risky assets. How are you seeing this situation? Is that the worst ever market crash you have seen?
It's different. I can remember several crashes in my career, starting with the October '87 crash, the 2008 crash, the situation after the 9/11 disaster. So, these things come along, and each time they're rather different from the ones before. I think it's interesting you mentioned the government bond market collapsing. I think that is no doubt a reflection that post what happened after 2008, and certainly after the Euro debt crisis a couple of years after that, everybody was expecting and almost forcing the governments of the world to inject significant amounts of stimulus into the market. Interest rates were at very low levels even before this crisis started. So there was little that the central banks could do in terms of interest rates. All that was open was for a massive fiscal stimulus, either directly from the government or by way of a more quantitative easing. And so, that has been seen to be true. And we saw our own government in the last week, or in the last 2 weeks, in two parts, put in circa 350 billion in the loan guarantee scheme and the direct grants to business, and an unknown amount with the wage guarantees that were provided on Friday. There has been similar stimulus packages in the major European countries, and America is putting something in place at the moment. So it's hardly a surprise that government bonds are weak when there's going to be so many more of them within the next 6 months. There's the total amounts so far is maybe $2.5–3 trillion. So that's an awful lot of extra paper that will be in the market, some of which will be absorbed on the balance sheets of central banks as part of a massive quantitative easing program.
Yeah, but let's talk about this panic selling. We said that panic is not really a plan, and what I want, and I think many of the investors watching this video, how should, as an investor, how should I react if I have got certain amount of money into stock? What should I do?
Oh, well, generally, the sensible thing at times like this is to sit tight. Shares are a long-term investment, and selling into a panic invariably results in you getting a terrible price if one compares with the longer term. You look at the price of companies like Apple and Microsoft immediately following the dot-com crash in 2000, 2001, and after the Lehman Brothers crisis and all that followed in 2008. And then subsequently they went up massively. Now, that's not to say every company becomes an Apple or a Microsoft, because the other side of the coin is there will invariably be some corporate casualties along the way. There always is. But the sort of shotgun selling of everything, good and bad alike, will invariably result in a poor performance. Like most things in life, it's working out what now is going to be the companies that survive and prosper in the future, and those that fall by the wayside. The weaker players will fall by the wayside, and we've already seen something like Flybe, for example. It has been in trouble for quite a few years, let alone months. And it took a very small push to send it over the edge, similar with Laura Ashley, which has been struggling for the best part of 15 years, I think.
I want to pick up on this corporate casualty that you mentioned, which is true. Within this market, definitely some company they can't survive. And I'm looking at the AIM market, for example, and these small cap companies. How do you see the future of the market, and in a way, which players you think they are going to be able to survive and in a way be attractive for the most riskier investors? And then we can go on to the bigger one.
Well, I think the fundamentals apply whether it is an unquoted business, an AIM business, or a fully listed business. Does it have products that people will want on an ongoing basis? Does it have good management? Does it have sufficient financial resources? Those questions are the same as they are at all times. I think what we now find ourselves in is a position where there is an interruption to normality that we do not know how long it will last. The Prime Minister has quoted 12 weeks. Whether that proves to be accurate or not, who knows? So there's an immediate issue of, you've got this period of interruption. There are various schemes that the government have announced. Quite a few AIM companies will be able to take advantage of them to, for example, keep staff in place. But there will be some that are casualties, just as there will be casualties in the main market and amongst private businesses. And the ones that will not survive will be those that were either weak to start with, because this is no doubt going to hurt those that are already weak, or those that there was a degree of hot air, fluff, call it what you like, about their underlying businesses. And situations like this tend to expose such situations that maybe hadn't been spotted before.
Yeah, so quality companies are definitely going to stay.
Yes.
Now, let's maybe look at the large cap, because one of the things that it might be sensible at this time, if you have some money that you want to invest, or you can just look at, is for maybe the bigger company. You mentioned the one they are going to survive, so the FTSE 100, the FTSE 250. Do you have any kind of criteria for which one you think are the best for investors to start to follow?
Well, those fundamental questions of quality that I mentioned earlier. I think the other bit that's maybe harder to tell is to the degree that there is a permanent change of behaviour after what has happened. Sometimes crises lead to a permanent change to behaviour. Sometimes they don't. As an example, let's say after the 9/11 crisis, there was a permanent change of behaviour in terms of aircraft security. It's always been different post that event. Other times, there's less of a change. The .com crash certainly removed a lot of weak players that went down. It also saw the stronger players, the Amazons of this world, come through and prosper like never before. They came out the other side of that. They tended to eliminate the weaker players who just couldn't compete with them anymore or couldn't raise finance any further, and therefore they became dominant within their area. So you will see the similar situation now, where the good will emerge. Whether there will be a permanent change of behaviour, hard to tell. Well, for example, after this, where people have been asked where possible to work from home, will people carry on to a much greater degree doing that? And therefore, will companies that provide expensive offices or in the future see less demand? You like I walk around the city of London and we see all these shiny glass skyscrapers going up. Will they be filled?
Exactly. I think that was one of the points. Some companies that I was watching that were actually Zoom and Slack. They offer, remote workplace and video conferencing, and would be those will be more popular. Just following your thinking, I think that's really interesting to see.
Yeah, and there will something like video conferencing, which had been a bit niche before, is suddenly, within a matter of 2 weeks has become very much mainstream because people are not meeting so often. I know obviously your family lives in Italy. I bet there is an awful lot of video conferencing going on with friends and family. Yeah. So you have the providers of the video conferencing. You also have the networks, the likes of BT, Virgin Media, Vodafone, who have already put a lot of fiber optic into the ground. It's holding up, but there's clearly stresses on the system, so there may be more investment going into the ground with things like that.
What about food companies? Because this is a question. I mean, we see Tesco, Sainsbury, and then we think, right, but people are always been buying food. Do you think now those stocks are the one that investors should look at because people are going to tend to go out less and just have more, and those companies have to hire more people, get more stock? What's your views on those?
There's obviously been a short-term boost where people have been stockpiling, which has been across the board on, pretty much every supermarket. And behind that, the suppliers of pasta, tinned vegetables, whatever it happens to be, that have been flying off the shelves. I'm sure there will be a short-term benefit. Longer term, will people stay more at home? Quite possibly. There was already, there had already been a trend to it, maybe more driven by economic factors, and you've seen with the likes of Deliveroo and Just Eat that there had been already a trend towards people maybe not wishing to cook, but also staying at home, and people getting pizzas, curries, whatever delivered. That will be given a significant boost with this. Restaurants, don't forget, although they are closed for sit-down customers, may still offer takeaway and delivery services under the government. And some of us like cooking, some of us don't. So this will change behaviour to a degree, but I can imagine that a lot of people who ate out in restaurants a lot before will probably go for the delivery option rather than sitting at home and cooking from scratch, especially if things are rather tough to get at the supermarkets, albeit that I think that is a short-term factor. They talked about there being an extra £1 billion worth of food in people's cupboards. Yeah. Well, when before too long, people will just start eating that. So supermarkets may see if anything, somewhat a tick down once people realise that food is still available, and therefore they'll eat into their 8-week supply of pasta.
Yeah, so talking about hospitality, we did mention about the restaurants, which maybe are going to change a little bit their format, let's say. And I was just thinking about fitness, right? So we have now all the gym closed, a few of boutiques, gyms as well. The Virgin Active is closed from today, so I did my first run outside after ages. And then you see picking up all this kind of online, on-demand training, even one-to-one is going bonkers, really. Everybody from all over the world is trying to sell this kind of PT indoor training. Do you think that could be maybe a change in the trend?
Well, there's obviously a large number of personal trainers, gym instructors, etc., who suddenly haven't got a job, and they are using their talents in a different way. So yes, I would imagine every gym instructor who can use online facilities will be trying to get customers, or contacting the customers at the gym they already know, offering them online training.
But is the gym going to do that as kind of like part of their offering?
Well, whether they can move quickly enough, and they've obviously, a gym, the management of the gym, they've tended to have those gym instructors on 0 hours contracts and freelance arrangements, so that they would keep the fixed cost down. So maybe they may be suffering the other side of having that flexibility in the past, because now those same people will be saying, I might be able to do this myself without any interaction. There are existing players, Peloton being the most obvious example. However, that is very expensive. And for large numbers of people who may have gone to a regular neighborhood gym in the past, they still want to be fit, but they're not going to be able to afford a Peloton. Well, the guy who was already doing the boxercise class at the local gym, who's now doing it via Skype, they're far more likely to take that up than go to a very expensive service like Peloton. And also, a lot of people may do exactly what you did today, Steffi. They just go out for a run, or they go for a bike ride. All those people that were doing a ride, sitting in a gym on an exercise bike, well, they might get that bike out of the garage, give it a spray with some WD-40, and go for a ride.
Exactly. So moving on, the luxury market. So obviously, we saw a massive collapse. Many big brand shops, they obviously close. But I was just wondering whether we are going to see an uptick in that market. We saw the Kering share price, for example, has been rising over the next, I think, last couple of days, of the end of last week, particularly with China coming back as well. Do you think there is something short, medium term, or we have to wait years before the luxury market can pick up?
I guess one of the questions on that goes down to how this massive government stimulus is paid for. If you look at there's lots of conversations. The government, for example, describes this as a war. Donald Trump describes it as a war. If you look in your history books at when governments have financed a war in the past, the end result of that is significantly higher taxation. America had a top marginal income tax rate of, off the top of my head, about 90% during the Second World War, and it ran very high for a long period. And what we all understand now as normal tax rates were very abnormal until probably into the 90s. Ronald Reagan, Margaret Thatcher started reducing them in the 1980s. Most European countries didn't do the same until the 90s. So it may be that there's somewhat of a shock as governments turn income tax rates back to historical levels to pay this back, because somebody has got to pay back this $3 trillion.
Exactly. So that's actually a good point. Talking about the oil price, obviously the coronavirus is just being a cherry on the cake, because there was the big war between Saudi Arabia and Russia, and the inability to find a compromise to sustain the market. Do you think a company like Shell, company like BP are a good company to buy at the bottom of the market?
Well, companies like BP and Shell are not a pure. They don't make their money out of just getting oil out of the ground. They make their money from the refining, the sales, the marketing, the byproducts, etc. So although their production business will clearly have been hurt by the rapid fall, essentially 50% fall in the last few weeks. Their refining and distribution business will not have been hurt by those price falls. I guess the other question, however, is, does the impact of this virus change people's behaviors in other ways that may result in reduced demand for oil?
Yes, because the people are not flying anymore, so there is lots of demand of oil that is going to be cut out.
Yeah, so people are, people are flying. Well, they've immediately stopped flying. Will they fly less in the future? I'm sure when you went out for your run earlier, you may well have noticed the air was considerably fresher in London than it is normally, because there are far fewer cars on the road. Again, will this be a permanent change of behaviour? Not totally. Once flights resume, people will fly, but will they fly less? Will they drive less? Hard to tell.
Yeah, we will have to see. Nick, now, hard question. Obviously, when it's this bad times, market crash, there is always an opportunity for investors to buy. It's very hard to catch the bottom, isn't it?
Yes.
Which one do you think are the signals that investors are going to start to buy back and the market is recovering, in your experience?
It depends on who you're talking about, because what history teaches us is that the private investor sells out for longer, and that the particularly smart institutional investors buy in when things are really at their toughest. As an example, Warren Buffett got a super sweet deal on some Goldman Sachs convertible preferred stock pretty much the weekend that Lehman Brothers went bust, and everybody thought that the last time the world was at its end. Now, not everybody can be Warren Buffett, but that is, those are the types of transactions I would look out for when people like him commit significant resources back into the market, into major companies. That is probably as good a buy signal as you can get.
So you think we still have to wait and see? If you add cash, if you have to give an advice or to an investor that has got some cash sit there, would you just keep the cash and keep watch the market and what is happening?
I think you would be very brave to to commit significant amounts of cash until there is a bit of clarity. Now that doesn't mean there are not good opportunities that will come up for individual investors. And everybody has different financial needs. But I would say historically the best buying signals into we were talking earlier in terms of larger companies. The best buying signals have tended to be when people with a good track record who have strong balance sheets have gone in and committed funds into the market.
Okay, that's a good signal to watch. Finally, last things I wanted to ask you is, obviously as an investor, seeing this situation happen and maybe see all your cash, your pension as well, maybe reduce, wiped, and maybe that makes you thinking, now I have to learn from this situation, I have to rethink my investment strategy. So what is your advice in building an investment portfolio that is more defensive, that is maybe more less risky or impulsive, following keeping in mind what is happening now?
What has happened has certainly changed the value of people's portfolios, but the fundamentals are the same as they were before. Building an investment portfolio is about not putting all your eggs in one basket. Is that you have a diversified portfolio. It is about making it appropriate for your stage in your life. If you are a young person with a long working life ahead of you, you have a riskier portfolio than somebody who's retired. Those fundamentals remain the same as they have been for the last 100 years. So what's maybe the worst thing to do is suddenly forget those fundamentals and suddenly, if you're 25, suddenly putting all your money in cash because in your pension fund because you're worried about it, and then at the other extreme, somebody who's 65. Well, really, they probably shouldn't have had all their money in shares anyway. So, those fundamentals apply as always. And again, don't put all your money, overcommit into a particular stock, a particular industry. You need that diversification.
When you're talking about long, medium, and short term, I think those are kind of some words that probably need to be clarified. Sometimes investor name, they think a short term is probably weeks, when actually it's not. And in investment, you have to, maybe people should look at investment with a more responsible attitude. If you have to give some timeline for a short, medium, and long term, what's the well-known rules?
I think you would describe short term is up to 1 year. Medium term would be 2 to 5 years, and long term 5 years plus.
Yeah.
That, you know, over a 5-year period, if you're invested in equities, you will see fluctuations, but with a few exceptions, you know, depending on timing, you would see more at the end of 5 years than you did at the start. If, you know, a short term, if you need money within the next year, you know, you really shouldn't have it in anything more exciting than a cash deposit or short-term government debt.
Yeah. And do you think, considering the situation with Brexit, do you think UK equities look, and obviously what is happening with the coronavirus, you think the UK equities looks more attractive than other equities?
I think very difficult to tell at this moment. There is such a degree of flux now across multiple markets to take a guess as to, well, will the United Kingdom rebound quicker than Italy or Spain? It is impossible to put a prediction on. You know, Brexit was a significant, or will be a very significant economic change. I think it is that there would be winners and there will be losers from that. Depending on which side of the argument you're on, people would argue that there would be more of one or the other. In terms of coronavirus, it's very hard to see too many winners out of it beyond the matters we talked about earlier, such as people suddenly utilizing video conferencing a lot more. You know, a sudden reduction in economic activity across pretty much the whole world has got to be generally negative, whereas something like a change in approach to foreign trade, there will be winners and losers, and there will be, you know, there has been an awful lot of arguments as to whether there will be more or less of them.
Okay, Nick, thank you so much for being with us today, and I hope we can speak soon again when things get a little bit more clear, and hopefully soon, and it's not gonna just take over all our summer, because like it looks like all our spring is gonna be spent in a house.
Well, you can still you can still get out. You can get some fresh air. Just do it by yourself.
Yeah. Thank you so much, Nick.
You're welcome.
Bye-bye.
Okay, bye.
And this is everything from the Financial Fox. I hope that you got some really good takeaways from the interview, and also some advice or comments or opinion that could be precious for yourself. But don't panic. Panic is wrong. Don't sell if there is an impulse. Don't do it. Sometimes just don't do anything is the best. You know, you don't want to crystallize a loss now when everything is just has no value. So just wait, be strong. Everything is going to be fine. I've got my family in Italy that is dealing with big problems. My brother is not well today and he works with my dad. So it's tough time for everybody. And the only way I can talk to them is through Facebook. So in a way, I think that Facebook is going to be a winner. Google is going to be a winner as well, and all these kind of remote work, remote socializing apps, platform. I think those are going to be very interesting to watch over the future, and definitely energy. And the reason why I kind of like Shell is because it's not, as Nick said, it's not just oil. They also have renewable energy. They're putting lots of money in renewable energy, and then they do all the products as well. So I'm watching Shell, the UK banks, communication, Vodafone, BT. So these are just some ideas that you can just make a list of some stocks and just watch them. You don't have to do anything now. Just as Nick said, wait for a signal coming from there. There will be a guy with a good track record that is going to make a move, and that move will be right. Now the market is going to pick up, and doesn't matter. Even if you lose that 10-20%, and then the stock is going to go up, is better than just gamble your money when you don't know if this is the bottom. I think this is the safest advice that I can give myself. Obviously, I don't have any Caris experience. I haven't seen the 28 crash. I was still studying at that time, but that's crazy. For me, it's crazy. And I read a lot about it, and selling for fear is wrong. No panic. Also, maybe look for companies, they pay dividend as well. So the portfolio shouldn't be just AIM stock. Forget about that. It's just too risky. And we never know if something like that is going to happen again. You can take some risk there, but I will also look for some companies, like big company, like the one that we just mentioned. And those won't pay dividends. You know, they are not going to go bust. Whatever happens, they're not going to go bust. And then keep cash. Keep some cash aside. I think this is a big lesson that many investors learn. Never over leverage yourself without staying without cash, because when time like this happen, you can't go to the supermarket and pay with the shares in BP, in anything that you rebuild. You can't. You need to have cash. You need to have. You always need to preserve that for times. They are not good times. It can be the stock market, or it can be even some health problems where you can't go to work. It's kind of like a common sense. And I think this big crash taught us about common sense, using our resources and spend our resources using common sense. Investment is part of our money management, our resource management, but it shouldn't be just just the only thing. There are properties out there. There are businesses out there that you might want to invest in. There are many things that each of us should look at. And don't forget that we are all here. We are all together. We are self-isolating, but you are not alone. Even if you are alone in a flat, you are not alone. You have got the ability to talk to friends. You can train inside. You can do so much, and just take this time to reset and think about it, what you should change in your life, in your behaviors, to make everything better, to make sure you are more defensive, to make sure that you are going to optimize your time. And don't be worried, because this virus is something that is going to stay. It's going to stay with us for a long time. It might will become like a flu. We are going to get it. And, you just, one day or another, maybe in the future, you might going to get it. And the crucial things is you don't want to get it now, when there is pressure on the hospitals, when there is maybe there is the risk, the chance that you can't be looked after. So that's why the government is staying at home. Staying at home is not only because you're going to die if you go out. It's not about that. It's because of the spread of the virus, and so many people that can get infected. And some of these people, a part of those, will be in crucial situation when they need the hospital. And the hospital, if it's over capacity, they won't be able to cope with the cases. And then the doctors, they have to make a choice. They have to make a choice who they are going to look after and who they are not. And the older people will be penalized. The people we love, our parents, our grandparents. and we don't want to lose them. We want to keep, we want to have them living as much as we can. I want to be able to see my parents again. I want to. I lost some of my members of my family already. They were old, but you know, I'm not going to see them again. And this is not nice, you know. I know life is one, but we have to kind of work together. That's why it's so important what the government is saying. Don't think only about you. Think about the people you love and all the system. We are all part of the humanity, right? And we have all to work together to preserve ourselves. This is serious. This is a really serious things that happen. And, you know, in sometimes it will be nothing because we will have a vaccine, we will build up immune system, we will be okay. But now we need to work together. So stay at home, phone your friends, talk to them on WhatsApp, be more techie, you know, that you have to develop these technological skills, and you are not alone. You are not alone. We are here. If you have any question about investment, please do send it to me so then I can make sure that in a way or another I'm going to get them answer, and I can give you as much as opinions, as much as views, as much as advice from experts that I can, because I know what it means, you know, panic and be in that situation. You don't want that, and you don't want to make the wrong decision. This is everything from the Financial Fox, and I will see you soon.